Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the retail numbers came out this morning, not so hot. So we're going to dive into the numbers and tell you what you need to know and what to expect in the coming weeks in this market. Let's dive in.
Trade Genius.
Hey buddy, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Just promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Yeah, Bob. So, personally on my travels, I thought that the retail crowd was pretty busy. I was in a vacation spot, obviously in Central Florida, but, it seemed like very busy times. So today's numbers were a little bit of a surprise to me because they were a pretty sizable miss on the retail numbers.
Yeah, look, the issue is that, we just can't have sunshine every day. I mean, the expectations for this economy are just too high, and people just don't have what this retail report tells me is people don't have the extra income to buy a broad basket of goods. So just like we've been saying for a long, long time, the money is going more and more towards the have-to-haves and less towards the want-to-haves. And it's going to create a disparity, which will eventually hurt the economy because the way our economy is broken down is that, what I would call non-essential services is a big part of employment and also a big part of what I would call psychic, satisfaction for people. People don't work to live. They work and they want those little extra things. And if all they're doing their whole life is just coming home and barely having enough for rent and barely having enough for food, and they have to, pay all these other things out and they have nothing left for enjoyment or satisfaction, it'll start weighing on the economy. And this is, I think, one of the first things that we need to see. A lot of people made the January number. The December number looked good because they're paying on installments. And as soon as the season was over, it just died. And you can see, look, this is like COVID lows, Phil, of sales activity.
Right.
So not good. And this is the first thing that you need to see is the consumer. Remember, the consumer always drives everything in this country. The consumer is retrenching. The economy and recession is not far behind. Next chart is simply showing you the breakdown by items. And look, food and energy, that's where they're spending their money on, Phil, and everything else they're not. And that's going to bite. And you're seeing it in the layoff announcements that are coming every day now, especially the bigger ones. But I can't even imagine across the board, in small town America, people are, probably losing their jobs left and right. And we made a joke when we were on vacation, instead of the gig economy might be in trouble, more like the gig is up economy, because, even like my daughter, she's going to be 23. They lived on that, Uber and Uber Eats and DoorDash. They don't do any of that anymore. None of it. Their rents went up again. Their insurance went up again. Living in their food. And they're like, hey, we have to eat at home. And my daughter owns her own business in the sense that she's an independent contractor. And she's seen a marked decline in client sales since the beginning of the year. So we'll see if it picks up in the spring. But, she actually called me today and said, hey, things are a lot slower than they were last year at this time. So she goes, I hope it's not a trend. And I'm seeing it too. So, my wife's business year over year down 30% and clients aren't spending as much, their tickets smaller too, Phil. So I think, we're starting to see, what I've been worried about for a long time. And it just takes hold, behaviors change. Like, we went on vacation, but we stopped going out to eat now. Well, how many other people are doing that? And I did it just because I'm so annoyed at having to spend so much money on, food that should cost half as much.
Yeah. And, if we flip back to the monthly chart here, this isn't just a seasonal thing, right? I know last March was red and last January was red, February and March were red, and so but January was really green last year versus now here we have this red. So this isn't a seasonal thing. This is a situational thing. And what's telling to me too is that we don't really have, like, at least, going into January of last year, you had a really bullish retail number. This year, I mean, you're going back to the deeper parts of the drawdown in terms of month over month and year over year, and we had no surge, which, so you can't say, oh, well, there's a hangover. Like, there's nothing there. So it will be kind of telling to see if we do get, that kind of pickup into June. If the summer months, really, we should see a pickup in the summer months. People are out traveling, or should be. Kids are off from school, so people should be out and about spending. So I think that's going to be a big tell. If we get red bars through June, July, August, that could very well tie into kind of that back half of the year where we're expecting things to kind of start to roll over fundamentally in the economy. But like you said too, here on this breakdown, like most of these categories are negative, but general merchandise is up because, I bet you see dollar stores, General Dollar, Family Dollar. I bet you those numbers probably start to pick up, and that might be a good staple play. But food and beverage, obviously food services and drinking places. I think Starbucks probably going to be like the last thing to die because everyone, that's their fix, right? So I think, those will probably be one of the last ones to stand. But yeah, I mean, other than even if you look at health personal care stores, even that's negative. You'd think that'd be a category that would be up, and it's not. Gas is down. People are just spending less. They're traveling less. And so I just think that, and if you look at the initial claims are kind of creeping up, and, it's just, we're starting to see this whole thing roll over. And, it's funny because Japan is officially in a recession and the Nikkei is at all-time highs, right?
That shocked me.
Yeah. And so, but that tells you the nature of these markets. And the reason why the Nikkei is up, is just, again, it's a function of central bank policy, but it's also killing them because their inflation is up. So you're in a recession, you have inflation, your stock market's up. What good is that doing anybody? So it's tough. And I think, well, ultimately that turns into people selling their portfolios because now they got to live, right? And that's kind of the kind of thing that starts to drag these markets down. Ultimately, that's why we say ultimately the fundamentals do matter, but there can be quite a bit of a lag between the real economy and what the stock markets are doing.
Yeah, and I think your last point is going to be one that's going to just drive behavior for a few years out in terms of it'll be just a constant drag. But Airbnb and Expedia are sucking wind, Phil. Mm-hmm. People think it's going to do well. That's interesting. And Disney had a recovery because they did everything with the kitchen sink. They threw out the balance sheet. But I'm watching that too. And it's funny, you said personal care. That's the business my daughter's in, and it's going to be really interesting to see, because what happens is that you may not stop doing things, but you may do them less often. And I think that's what we're going to see. And the problem with it is that people have hard costs, and it's called irreducible. It's basically you have irreducible cost structures that you're just up against the mountain, if you will. And especially small businesses. You can't go from 4 employees to 3. You might as well close your business down.
Right.
And then so what ends up happening is that just down the street from me, the owner basically said, you know what, my cost structure is such that it's just not worth my mental health to be open anymore. Mm-hmm. Laid off 27 people. Yep. He's done, and he says, it wasn't worth my mental health. I wasn't making enough money to make it worth my while to take such a risk. And I think that's the thing I think is going to start sprinkling in all over the place, as we go through this year, is that people are just throwing in the towel. Their leases come up, they don't renew them, they close down. Right. In my neighborhood, which is wild, you would think pizza places would be the last places to go out of business. We've had a pizza place and an Italian restaurant go out of business in my town. We're not poor here. In January, gone, just closed. Leases were up. They didn't renew the leases. And I think that's a tell to me. I mean, because pizza is a pretty relatively low ticket item, and it's not like we have 20 pizza parlors. So to me, I'm just smelling these things. And I just think it's just going to be constant, Chinese water torture until the whole thing just collapses.
Yeah. You mentioned Disney, and they're busy. Walt Disney World's busy, but I'm going to tell you there's a lot more international there this time around, way more. So, I think we're getting like some of the last, I think what surges that you would see in that company are being fueled internationally. But as far as the local crowd, smaller than we've seen. So I think domestically, we're just seeing the start of this thing starting to roll over. And we've had a long hangover from stimmy money, from COVID. And I think it's finally done. And people are down to either we have a smaller percentage running up their cards and defaulting. Larger percentage isn't doing that, but then I think we're going to start seeing that reflected in their savings. I think the savings rate is going to start to take a hit over the next 6 months, and those are key tells as well. So I expect claims to continue, unemployment to go up. Those are your final death nails where the market, the tide's out, and who has clothes. Those are the final things.
Yeah. So anyway, guys, we have some interesting stuff to share with you the rest of the week. Energy surged, and this time the energy stocks went with it. So may talk a little bit more about that. The dollar fell. We're at an interesting spot with the market. Tomorrow is, OPEX. We'll see what next week brings. 3-day weekend, guys. So I doubt the market will be down tomorrow, but maybe flattish, but it probably won't be down. They may try to ring the bell, double top this thing back at the 503 area on SPY, but energy surging. And so we're looking at, are we going to get the tech to energy rotation that everybody's been waiting for? But it was pretty broad base, Phil. Maybe we'll touch upon that this weekend. And we'll be back with you guys tomorrow.
All right, guys, let us know your thoughts on the retail sales numbers in the comments below. As always, thanks for watching. Thanks, Bob. And we will see you guys on the next episode. Take care.
Trade Genius.